Alright, ji, Bismillah Rahman Rahim. Students, today we will be talking about double entry. Now, what does double entry specifically means? Double entry is a system on which entire accounting is based. You can also think of double entry as a base for a building to stand. If there is no proper base, the building cannot be erected, right? Alright, let's move forward to double entry. There are two terms in double entry. One is debit and another is credit. Now, students that are not familiar with accounting previously think that, which is wrong assumption, they think that debit means to add or to plus and credit means to subtract or minus, which is entirely wrong. Debit does not means a plus and credit does not means a minus. So what does debit and credit stands for? Debit and credit are special terms which are used in double entry systems. Now you can also think of an account. So what is an account? Account is a place where different transactions are summarized. Now if in an account there are two sides, the left hand side of an account is known as debit side and right hand side of an account is known as credit side. Again, there is no justification what we can think of why does the term debit is used for the left side and why does the term credit is used for right side. We will understand in a while. Now, there is two things. One is debit nature and another is credit nature. Now, what does debit nature means? First of all, we have something in accounting which is known as asset. Now, what does asset means? Asset means anything that a business or individual owns. Whatever I have in my possession or whatever I own is known as an asset. There are n number of assets available, such as bank balance is an asset, the cash that we have in our pockets is our asset, the inventory that we sell, which is known as stock to our customers, it is also known as asset, the building in which we live or operate business in is also known as asset, the machine that we are using in factory plant, it is also known as asset. The car we drive is also known as asset. So anything that is in our possession and which will be giving benefit us in the near future is known as asset. So whenever we talk about asset, we say that asset has a debit nature. Secondly, liability has a credit nature. Liability, what does a liability means? Liability means an obligation of the business or an individual. If I have taken a loan from a bank and I have to return it in the near future, the liability is known as, the loan is known as a liability, which means I have an obligation to pay back the liability in near future. So whenever we are borrowing from someone, it is known as a liability. And what does mean capital? Capital is also known as owner's interest in the business. Whatever in the business is left after paying off all the liabilities is known as capital. In simple terms, liability is capital of outsiders and capital is liability of owners. Means the amount of money which the owner has invested in the business is known as a liability. Now we were trying to understand the specifics of double entry. We can start from this that assets has a debit balance, debit nature and liability, and capital has a credit nature. If an asset has a debit nature means whenever asset goes up, we will debit that specific asset, and whenever liability and capital goes up, the liability and capital is always credited. Asset is always increased by way of debit and liability and capital is always increased by way of credit. Let's move forward. Whenever asset is increased, it is debited. Why? Because the nature of asset is debit. And whenever asset is decreased, or goes down, it will be represented by a credit. And similarly, it is vice versa. Whenever liability and capital increases, it is credited because the nature of it is credit. And whenever liability and capital, we want to decrease the liability and capital, we will debit that liability and capital. So let's move forward. We have two types of assets known as non-current assets and current assets. Now, what is exactly the difference between non-current and current? Non-current assets, my dear students, are assets of permanent nature. Means there is no change very frequently in these sort of assets. These are permanent in nature. These are bought with the intention to use rather than with the intention to sell. Thirdly, non-current assets are kept for more than 1 year. Yes, more than 1 year. Now there are some examples such as building. We cannot buy buildings every day. It is of permanent nature. The building doesn't changes much in value. So there is not much fluctuation in the value of building. Therefore, it is a non-current asset. Non-current assets are also known as fixed assets. Secondly, there are some other examples as well, such as motor vehicles. Again, motor vehicles are also of permanent nature. We have bought them for use rather than for resale. Then we have a machine or plant that is used in a factory. Then there are office equipment, and there can be some other examples as well. Secondly, we have current assets. Current assets are cash in hand and cash at bank. And current asset also comprise of things that will soon be converted into cash, such as inventory, which is also known as goods or stock in trade or merchandise. These are all names of inventory. Now, what does inventory means? Inventory means we have a shop, mobile phone shop, and we are selling cell phones and gizmos and gadgets, and all these gadgets are our inventory. Why? Because we have bought them with the intention of selling them in near future. So why does an inventory is an asset? Inventory is an asset because it will give us benefit in the future, because whenever we will be selling them, we will be getting cash in exchange of that. Secondly, we have trade receivables. Trade receivables, also known as debtors previously. Now, what does term debtor or trade receivable means? Debtor or trade receivables are our customers whom we have sold the goods on credit terms. Means in sooner or later they will be going to pay us the amount that they owe. Thirdly, we have bank balance, the amount which we have deposited in our bank account, and we have cash balance as well. So these are all current assets. Current assets have of a temporary nature, and non-current assets are of a permanent nature. Current assets such as stocks, inventory are bought for resale, and non-current assets are bought for use rather than resale. Current assets change in value very often because we don't have an exact amount of money in cash or in bank for a long period of time. It keeps fluctuating. And non-current assets are of permanent nature because the value doesn't change very often. Now let's move forward. What I have done to explain you the double entry concept, I have divided some common transactions into some types, and we will be discussing each of the transaction and understanding what does a debit and credit means. Now what I am specifically making right now, I am making journal entries. To make a journal entry or to journalize an entry means to record an entry in terms of its debit and credit. Now we will see for each type of transaction which account should be debited and which account should be credited. Remember again, my dear students, debit does not mean a plus, credit does not mean a minus. Whenever an asset increases, it is always debited, and whenever a liability or capital increases, it is always credited, and vice versa when it is decreased. Now first of all, there is a transaction introduction of capital into the business. Now, if you are doing some sort of business and if you are starting up a business, you need capital for any type of business to start. Now, whenever we are introducing capital, we have already learned that capital has a nature of credit. Whenever capital is increased, we will be crediting the capital account, so capital will be credited. Now, what is debited? Now, there are two things. First of all, there's a very common thing to bring cash or bank balance into the business whenever business is started. When I'm starting a business, I am bringing cash or bank from my home, from my personal finance to run the business. So bank is an asset for the business, and whenever an asset increases, it will be debited. We will be debiting a bank. Now it is also possible that I bought up a non-current asset from my business. I can give you an example. I am using a van at my home. It is a motor vehicle which can also pickup vehicle which can also be used for delivery. So what I did, I have taken van from my home to my business. Now for business, it is a new asset, a van that is coming. So we will be debiting van account or motor vehicle account. We are debiting an non-current asset account. Secondly, buy non-current asset. I have bought, we need a computer for use as a cash register in our business. Now, whenever we need to buy some non-current asset, an asset increases. Maybe we have bought a motor vehicle, for example, or a computer. If we are buying a computer, the computer or equipment account will goes debit because an asset is increasing. Now, if we have bought a motor vehicle, there can be two things. Firstly, maybe we have bought a motor vehicle through bank account. A bank account, we have paid it for it by check, and our bank decreases. And if our bank is decreases, as you already know, bank is an asset. Whenever an asset decreases, we will be crediting an bank account. It can also be possible that I haven't paid yet for the amount of money which I owe for a motor vehicle. Now there comes role of liability. To remind, liability is an obligation of the business. If I have bought a car on credit terms because the car dealer is a friend of mine and he knows me well, and he has given me some time, maybe 3 months, to pay off my liability, I will be crediting a liability which is known as payable. Okay. Thirdly, sell a non-current asset. Maybe I have bought a car and now I don't need it probably because I have outsourced my delivery operations to some courier company. Now I am selling my non-current asset. So whenever we are decreasing a non-current asset, an asset goes credit. So I will be crediting motor vehicle account. See, when we have bought a motor vehicle, we have debited an asset account, and we are selling the vehicle, we will be crediting motor vehicle account. Now there can be two things again. Firstly, I have sold the motor vehicle on cash, so we will be debiting cash or bank. In accounting, specifically in CIE, Cambridge International Examination Accounting, whenever there is not mentioned that we have sold something through cash or through check, we'll always be writing bank, because bank is by default the mechanism used for receiving payments. Secondly, if we have sold the vehicle but we haven't got the money yet, why? Because we have sold the vehicle on credit terms, there comes a receivable. Now what does a receivable mean? Receivable means a customer whom we have sold the goods on credit basis. means soon we are going to receive money from him because he is an asset. Whenever an asset increases, we'll be debiting that asset. So we'll be writing receivable if we don't know the name of the person or company which we have sold goods. If we know the name of the company, that Mr. Ahmad, so we'll be debiting Mr. Ahmad account. Then we have return non-current asset. Now what is happening, we have bought an asset, maybe motor vehicle, and after a while we came to realize that the vehicle is not working as we have expected, and there is some serious fault in the motor vehicle that we have just bought. So what we'll be doing, we'll be returning that vehicle to our friend which we have bought the vehicle. Now we are returning vehicle to a supplier. So motor vehicle is going out of the business. Whenever asset is going out of the business, we'll be crediting that asset because the nature of an asset is debit. Now there can be two things. Firstly, if we have already paid him the money from bank, we will be asking for a refund. Now if he will be returning us the money, we'll be debiting the bank account because whenever an asset increase, we'll be debiting an asset. There can be some other thing, that we have bought a vehicle on credit terms, means we haven't yet paid for the amount that was due to us. We were having a liability. Now if we have returned the vehicle, what do you think that we will be paying for that asset? No. As we have already returned the asset, our liability decreases, and the nature of liability is credit, and whenever we will be decreasing a liability will be debited. So payable or the name of Mr. Ahmad Motors will be debited, liability will be debited. Then we have another transaction, purchase goods and inventory. Let's learn something else. Whenever we will be buying stocks or goods or inventory or merchandise or goods for resale, we will be using a purchase account. Whenever we are buying goods, the stock is coming into the business and asset is increasing, and what we will do, we will debit the purchase account. Purchase account is always debited. You also need to learn that we won't be using stock account or inventory account on regular basis. Stock or inventory account is always used at the end of the year adjustments. Now at this point in time, you need not worry about that stock account. So just remember, we won't be using stock account. Whenever we'll be buying stocks, we will be debiting a purchase account. So why we are debiting purchase account? Because stocks are coming into the business. Whenever we are selling stock, as you know, the stock is going down, we will be crediting the sales account. For buying, we'll be debiting purchase account, and for selling, we'll be crediting sales account. Whenever customer returns faulty goods to us, means we have sold some goods and due to some reason customer is returning back those goods. Why is that so? Because they are faulty, they are damaged, or because they are of wrong size, color or specification, or customer just doesn't needs it. If we have no questions asked return policy, we'll be getting it back from the customer just to not make the customer upset. Return inwards account will be used and return inwards will be debit. Why is return inward debited? Because we are getting goods back and the assets are coming into the business. Therefore, return inward account will be debited. Return inward account is also known as sales return account. Sales return. And whenever we will be returning goods to a supplier, this is known as return outward. For the similar reasons that we have discussed in return inward, means the customer we are returning goods to supplier because the goods are not of specific quality, or goods are damaged, or the goods we haven't ordered yet and the supplier has delivered it to us, or they are of wrong size or specification. Return outward is also known as purchase return and will be crediting purchase return. See, there are 4 accounts that need to be used. Whenever we buying stocks, we will be debiting purchase. Whenever we are selling stock, we will be crediting sales. Whenever customer is returning goods to us, we'll be debiting return inward account, and whenever we are returning goods to a supplier, we'll be crediting return outward account. So these four accounts are always used for stocks. Remember, one thing that is very important, if we are buying a computer for the business use, will be not be debiting purchase account. And why is that so? Because computer is not a stock, because we are not a computer dealer. Computer is our non-current asset and is held for use in the business. So whenever we are buying computers, we will be debiting equipment account, and whenever we are buying stocks, maybe clothes, because we have a textile shop, so for clothes we will be using purchase account, for our inventory, and for computer or motor vehicles or similar type of non-current asset, we will be using a non-current asset account. Similarly, if we are selling clothes to a customer, we will be using sales account, and if we are selling our old furniture, we will be using a furniture and fixture account. I hope you remember this. Then we'll move forward. Whenever we'll be buying goods for business, we'll be debiting a purchase account. Then there can be two things. First, that we have paid for the inventory we have just bought, we'll be debiting we'll be crediting a bank account. Why? Because bank is an asset. Whenever an asset goes down, we'll be crediting bank account. There can be another scenario that we haven't yet paid for the amount that we have for the goods that we have bought, and we'll be crediting a trade payable. Trade payable is a liability. Trade payable is the amount of money that we have to pay to our suppliers, that the amount that we owe him. Now, if we exactly know the name of the business that we have bought goods from, maybe XYZ company, we'll be crediting XYZ company. And if we do not know the name of the business, then we'll be writing a trade payable. Let's move forward. Sold goods or stock to customer. Whenever we are selling goods to customer, we'll be crediting sales account. Why we are crediting the sales account? Because an asset that is stock, it's going down, we'll be crediting sales account. And similarly, if we are selling goods, maybe we are getting money in form of cash or bank. If we are getting money in forms of cash, we'll be debiting a cash account, and if we are getting a check from the customer, we'll be debiting a bank account. So bank and cash are both our assets. And maybe we are selling goods on credit, so there comes the role of a customer, a debtor, a trade receivable. Trade receivable, as we remember, are our customers whom we have sell goods on credit basis. A trade receivables is also an asset. We'll be writing trade receivable if we do not know the name of the customer. If we know the name of the customer specifically, we will be write Mr. Ali, whose name, whatever name is. Then next transaction is return goods from customer. Maybe customer have returned goods to us because they are faulty, because he doesn't need them, because their goods are damaged. So if the goods are coming into the business, will be debiting return inward account, because it is an asset that is coming into our business, that the damaged goods. Return inward is also known as sales return. Sale return or return inward will be debited. Now there can be two things. Firstly, if the customer has already paid us the money, we'll be returning that money to us. We'll be giving him a refund. So we'll be crediting our cash or bank account, depending that we have paid him by cash or by check. And maybe the customer has not yet paid the money and still has returning goods to us. So we'll be crediting the customer account, which is known as trade receivable, or his name, if we know Mr. Ali's account, will be credited. I hope you are getting the transactions. Then return goods to supplier. If we are returning goods to our suppliers. Now similarly, if the goods are damaged, we are returning to our supplier, we'll be using a return outwards account. A return outwards is also known as purchase return. A return outward or purchase return will be credited because goods are going out of the business and asset is decreasing. Then if we have already paid the money to a supplier, we are supposed to get our money back from supplier, we'll be debiting a bank account. If the supplier, if we haven't yet paid the supplier, we are not going to pay our supplier because we have already returned the goods, and now there is no point paying for goods that we have already returned. Then we'll be debiting a trade payable. Now, why are we debiting a trade payable? You know, trade payable is a liability, and whenever a liability goes down, we'll be debiting that liability. Now, let's move forward. Next, move forward. Expenses paid. Now, there is another type of item in the accounting vocabulary which is known as expense. Now, what is an expense? Whenever we are spending money for the business, for some business purpose, it is known as expense, such as rent, such as electricity, such as bills, such as insurance, such as cleaning, or maybe heating, so air conditioning. This is known as expense. So you must remember, an expense has a debit nature. So how can we remember that an expense has a debit nature? I can give you two reasons to remember that expense is debit. First reason is an asset is debit. Now, what is an asset? An asset is something that we can take benefit from. If we buy a house, we can live in that house. So that house is an asset. Similarly, if we rent a house, the rent is an expense, because we are getting benefit from that house as well. There is no difference if we buy a house or if we rent a house. In both of the scenarios, we are getting benefit from this house. Similarly, if we are paying bill for electricity, it is an expense, but in return, we are living in a home with electricity, with air conditioners on, or with fans and lights. We are getting benefit from that asset. Okay. So expense is also debit because we are getting benefit from various expenses such as insurance in case we have an accident or fire or something, or electricity or internet services or mobile carriers. These are all expenses, but again we are benefiting from those services. So you must remember, an expense is always a debit. Then we can also remember from another way that a capital is always credited. By now you are sure of this thing, that capital has a credit nature. So what do you think, if we incur an expense, will it increase our capital or decrease our capital? So some of you might able to guess that expenses reduces our capital. Something that is reducing our capital, an expense or loss, is always debited because it reduces our capital. You can remember in this way as well. Whenever we are paying rent account is debit. Why is rent or electricity or insurance is debit? Because rent has a debit nature or expenses has a debit nature. If we have paid the expense, we'll be crediting a bank account or cash account, because a cash or bank is an asset. If an asset is going down, we'll be crediting an asset. There can be another thing, that we have just incurred an expense and haven't yet paid for it. We have just recorded an expense and haven't yet paid for it. Then the expense account will be, then the liability will be booked, which is known as accrued. So you need not worry about the word accrued right now. We'll be discussing it later in another topic, which is known as accruals and prepayments. Just remember, if you haven't paid the rent yet, it is a liability, which is also known as accrued rent. Let's move forward. Another thing, which is income received. Maybe we have an extra space that we have lent it out to another business or an individual for some extra income, which is income received. If we have already discussed that expense is debited, the nature of income will be opposite to that of expense. And income or profit or gain is always credit. So why is income, profit or gain is credit? Gain or profit or income is credit because capital is credit. Whenever we are earning some money in the business or in the capacity of individual, whenever we are earning something, our capital increases. Whenever business makes a profit, the capital of the business is increased by amount of profit that the business has earned. So anything that increases capital will be carrying same nature as that of capital. If the capital is credit, income is also credit. Whenever capital is increasing, whenever profit is increasing, capital is also increasing. So whenever we are earning some income, income account is credit. In this case, rent received is credit. There can be other incomes as well, other examples such as commission received or rent received and discount received or fees received or consultancy income, and such are the examples. If we are receiving money from a tenant, maybe in check we'll be debiting a bank account because bank is an asset and asset increases in debit. And if we are getting money in cash terms, we'll be debiting a cash account. And if the tenant has not yet paid us the money, he'll be giving us the money soon. It will be known as accrued income. Accrued income, we'll be recording it in accrued. So don't worry about accrued right now. Accrued is a receivable or a payable. Then move forward, we are moving forward, payment to supplier. Whenever we have bought goods on credit, sooner or later we have to pay back the supplier the amount that we are due to pay, and a liability is always credit. But if we are clearing our debt and we are extinguishing a liability is debited, and bank or cash will be debited. We are paying a supplier, the supplier account Mr. XYZ. Mr. XYZ will be debited, and if we are paying money through check, bank will be credited, and if we are paying money through cash, cash will be credited. Then drawings. Now what does word drawing means? Drawing means taking out something from the business for personal use. Now I have a shop and I also live in a house. I have a mobile shop and I need a mobile phone for my personal use because my old mobile phone is very old now and I want to get rid of my old phone and want a new phone. So I took an iPhone X from my business to my home. So this means we have done drawing from the business. Drawing can be in cash form, in check form, or in stock form. So just remember one thing, drawing is always debited. Say, drawing is always debited. I am writing drawing in a debit nature. Drawing is always debit. Why is drawing debited? Because drawing reduces our capital. A capital is a credit. So anything that reduces our drawing, such as expense, anything that reduces our capital, such as expense or drawing, is always debited. Drawing is also known as appropriation of profit. Means we are taking out profits from the business, which is known as drawing. So drawing account is always debited. Now the answer depends on what is credited. That if we are taking cash out from the business for personal use, maybe to I'm taking cash out of the business to pay school fees of my kids. This is known as cash drawing. If we are taking money out of from our bank account for personal use, the bank account will be credited. And if we are taking stocks out of the business, we'll be crediting a purchase account. Remember, we never use stock account during the year. Stock account is always used end of the year. Whenever we are buying mobile phones for the business to resell them, we'll be debiting purchase account. And whenever we are taking out stock from business, we'll be crediting a purchase account. Then second last transaction, if we are receiving a loan from bank. See, many businesses need a loan from the bank because they don't have sufficient capital from themselves or friend and family to invest in the business. Then they seek help from commercial institutions such as a bank. So if we are getting loan from the bank, our bank account goes up. Why? Because we need the money and bank has lended us the money for some years, maybe the bank account is debited. If we are taking out a loan also comprises of a liability. A liability loan account will be credited, maybe loan from Barclays Bank. Then last transaction but not the least, if we are repaying the loan back to the business, you already know bank account will be credited. Why? Because we are returning the money that we have taken out from the bank, and if we are returning the money, the asset goes down, bank account will be credited. Similarly, the loan payable will also be debited. Why? Because loan is a liability, and the nature of liability is credited. Whenever we are returning back the liability to bank, we are extinguishing a liability will be debited. So these were the transactions that we have learned. So for the sake of remembering it, I have devised a mnemonic. So I am sure students, you already know what does a mnemonic means. Just to remind, mnemonic means some set of alphabets or numbers that we devise to remember a particular concept, maybe so we can remember it for a long period of time. So I have devised a mnemonic for this, AED. So I have specified AED as Arab Emirates Dirham. You know the currency of UAE is dirhams, which is known as Arab Emirates Dirham. Now what is Arab Emirates Dirham stand for here? A for assets, E for expenses, and D for drawings. So we can remember that AED, debit. Arab Emirates Dirham is always debit, means asset, expense and drawing has a debit nature. Whenever asset, expense and drawing goes up, these are always debited. Similarly, LIC, what I have named LIC as Life Insurance Company. Life Insurance Company, L for liability, I for income and C for capital. Liability, income and capital, LIC, Life Insurance Company is always credit. Why is LIC credit? Liability, income and capital always increases on credit. So these things, AED always increases on debit, and LIC, Life Insurance Company, always increases on credit, and vice versa. Whenever we want to decrease Arab Emirates Dirham, we will be crediting it, and whenever we want to decrease Life Insurance Company, liability, income and capital, will be debiting. So this is the end of the lecture. I hope students you understood the